Good mid-morning, you dirty degenerates and people who decided to not join the Twitch stream this morning and miss out on over 200% of gains given out in less than an hour. Welcome to the Midday Market Update, where the Federal Reserve is on pause, AI stocks are on cocaine, and Congress is once again threatening to shut the government down like it's a feature and not a bug or a actual problem we have. You ever notice how markets don't really crash anymore? They just develop anxiety, kind of like that one kid that you see in your class all the time. Well, this isn't fear, this isn't panic, just that constant something bad is coming, I just don't know what it is yet vibe. And that's pretty much what today's market has been so far. So that's one thing you need to understand if you're trading this. So let's go ahead, make like some butt cheeks and break it down because a lot is happening even if price action is pretending it isn't. So let's start with the people who control the price of money and still somehow can't decide what to do with it exactly. Yes, shocker of the century. I know, nobody saw this coming, right? Nobody saw this coming. The Fed is expected to hold rates steady this week. After 3 cuts at the end of 2025, they've entered what I call monetary yoga mode. You keep hearing the same phrase over and over. Policy is in a good place, which is basically Fed speak for we don't know what happens next. We're scared to move, and please stop emailing us CPI charts. Rates are sitting around 3.5% to 3.75%, which they're calling neutral. Neutral, by the way, is the most dishonest word in finance. It's like saying you're not cheating, you're just exploring your options. Because neutral to who? Not neutral to renters, not neutral to borrowers even, and not even neutral to regional banks. And it's not neutral to companies rolling debt, aka IWM. It's only neutral if you're already rich. It's basically like saying, oh, well, I got into an Ivy League school, and then you're like, my dad also owns like Muscle Milk. Okay, well, you didn't have to deal with everything we dealt with, so whatever. Now, why are they stuck? Well, here's the Fed's problem. Inflation is cooling, but it's not done. Core inflation is still near 3%. The job market, it looks fine until you actually look closer. The revisions, they're coming in lower, by the way. And Powell himself hinted jobs may be overstated. So the Fed, like a lacrosse player, is boxed in. Cut too soon and inflation flares back up, and you hold too long and the labor market starts to show its butt crack. And the worst part, they know both risks are very much real. Not like, Bigfoot exists real, but like actually real. That's not confidence, that's paralysis with a Bloomberg terminal. And if you think the Fed agrees with itself, that's cute. That is so cute. Inside the Fed right now, it's not team pause versus team cut. It's hawks pretending they're patient, doves pretending they're responsible, and everyone waiting for someone else to blink. You've got new voting members who want to hold the line, others quietly saying the labor market is crying, and at least one governor ready to dissent again. And let's be honest, who's that one governor? It's Stephen Moran. It's Trump's boy. Trump's guy is in there just every time. Oh, we cut 25? We should have cut 50. Where's my drool cup? Ugh. Now, this matters because the first cut of 2026, it's not going to be friendly, okay? It won't be victory lap cut or soft landing achieved cut. It'll be, oh, crap, we waited too long cut, okay? And guess what? The markets already know it. That's why rallies feel nervous. That's why dips get bought and hedged against at the same time. They're playing hedge sexual. You know, they're playing both sides. And just to make this week even more fun, the Fed isn't operating in a vacuum because, of course, Fed Week also includes some Supreme Court drama, Trump possibly naming a new Fed chair, open criticism of Powell, and a government shutdown, clock because, well, we might get another government shutdown. Nothing says independent central bank like, we might fire you, by the way. The U.S. government might fire you even though you're an independent agency who doesn't have to answer to the U.S. government. Markets, guess what? They don't like this. Not because it guarantees chaos, but because it introduces uncertainty into policy credibility. And everybody, what is the one thing that the markets hate? Uncertainty. It's like, bro, just break up with me. Don't ghost me, right? Markets don't like it. Okay? So even if the Fed does nothing this meeting, traders are already gaming what happens after Powell. Who's going to replace him? How political does policy get? That's not priced in. That's just what we like to call hovering. But while the Fed hits pause, AI just hit double down. Let's talk about how the most important headline of the day kind of made the day today. Nvidia, well, because I think they're hemorrhaging money and don't want to have to pay all these taxes, they just dropped another $2 billion into CoreWeave on top of their existing $3.3 billion stake, bro. So just a heads up. This isn't some quote-unquote strategic partnership. This is full send vertical domination. CoreWeave is building AI factories, GPU dense data centers, cloud capacity hyperscalers that can't build fast enough. The goal, 5+ gigawatts of AI compute by 2030. That's infrastructure. That's industrial scale. That's not a bubble behaviorally. But here's where Wall Street gets uncomfortable. Before we get to this, by the way, how long have I been telling you guys that infrastructure is the next AI play? Go ahead, if you're on stream right now, just let me know. When was the first time you heard me say infrastructure is the next winner in AI? Because I am right. That is one thing you need to understand. I am always going to be right about tech narratives and cycles because I used to work in this industry. Now, we have a circular money problem. Let's go ahead and walk through this slowly. Exactly, DK, 5 years ago. Nvidia, it invests in CoreWeave. CoreWeave buys Nvidia chips. Nvidia books revenue, Nvidia stock goes up, and Nvidia invests more. This isn't illegal. This isn't fake demand, but it is reflexive. So you remember how I told you, like, it's just been one big circle jerk? This is the circle jerk I'm talking about, okay? It's like they're going skiing, but without the poles, if you get my drift. And reflexive systems don't break slowly. They just snap, you know, kind of like when your grandma falls down the stairs. That's why the AI story is real. The spending is real, but valuations are extremely sensitive to disappointment. This is not .com. This is even more dangerous because the products actually work. And while AI prints money, Washington is busy lighting matches. Yes, you thought we were only going to get one government shutdown? No, my friend. The risk is back on, just like a condom. Because DHS funding fights, no compromise, Senate delays, the House is gone, and there's a deadline approaching. Markets aren't panicking. They're basically rolling their eyes, kind of like when your parents who threaten to divorce each other all the time start to threaten each other again. You're like, oh, brother, not this again. Because every shutdown chips away at confidence, freezes agencies, adds friction to growth, and reinforces the dysfunction of your family where your stepmom has just kind of ruined your life. It's not a crash catalyst. It's more of a volatility tax. And those taxes compound, unfortunately. So what does this all actually mean for the markets? Well, here's the honest state of play. The Fed is paused. It's not even confident. The labor market is, well, it's softening under the surface right now. AI spending is accelerating aggressively. Nvidia, well, it's everywhere at this point. It's becoming basically Cisco systems from early 2000s or ADP in the early 1990s. Politics is injecting noise into policy. Valuations are stretched but supported by liquidity. This is what we like to call a fragile market for my American speakers out there. Not bearish, not euphoric, just one surprise away from repricing, which is why upside rips are sharp, sell-offs are fast, and, well, nobody wants to hold naked risk overnight. So if you're sitting there thinking, why does this market feel calm but tense? Congrats, you're actually paying attention, or you're a part of the free Wi-Fi radio community, because we call this stuff out before it even happens. This is what we call Fed pause week, AI spending escalation, political pressure, shutdown risk, and valuation anxiety. Nothing's broken, but everything's pressurized. And the markets don't explode when things are bad. They explode when confidence cracks. So we'll see who blinks first in this game of chicken. That's why your midday market reality check is here today. If you want the Substack version, make sure you subscribe to Substack. If you want to get my real-time plays from my community members and everything like that, well, join today. Make sure you like, subscribe, comment. If you got something out of this video today, give me your hottest take in the comments, and we will be back with another banger later today when I give you guys the rundown on what happened in Flow. I also have some more earnings articles coming out as well. I hope you all have a great day. I'll see you guys in the next video. Peace.